Here's a summary of United Airlines 2025 Q4 earnings call, focusing on key financial metrics, future forecasts, risks, highlights, and important management statements, presented for easy reading. Introductory remarks. Good morning, everyone, and welcome to United Airlines Holdings' fourth quarter and full year 2025 earnings conference call. I'm your facilitator, Colby, and I'll be guiding you through today's discussion. After our management team provides their initial remarks, we'll open the lines for your questions. This call is being recorded and is copyrighted. Please note that no part of this call may be reproduced or rebroadcast without the company's express permission. Your participation signifies your consent to our recording of this call. If you do not agree with these terms, please disconnect. Now, I'll turn the presentation over to Christina Edwards, Managing Director of Investor Relations. Christina Edwards, Investor Relations. Thank you, Colby. Good morning, everyone, and welcome to United's fourth quarter and full year 2025 earnings conference call. Our earnings release is available on our website at ir.united.com. Please remember that information discussed today may contain forward-looking statements, and actual results could differ materially. For a more detailed description of these factors, please refer to our SEC filings. Unless otherwise noted, we will be discussing financial metrics on a non-GAAP basis, and historical operational metrics will exclude the pandemic years of 2020 to 2022. Joining us today are CEO Scott Kirby, President Brett Hart, COO Toby Enqvist, Chief Commercial Officer Andrew Nocella, and CFO Mike Leskinen, along with other members of our executive team. I'll now hand the call over to Scott. Scott Kirby, CEO. Thank you, Christina, and thank you all for joining us. 2025 presented its share of unusual challenges, but the people of United demonstrated remarkable resilience and a true no-excuses culture. Our strategy over the last decade to build a revenue-diverse, brand-loyal airline has proven not only effective but remarkably resilient. We expect to be the only U.S. airline to achieve year-over-year EPS growth despite significant headwinds. I'm incredibly proud of the United team and how they've transformed this airline. Before looking ahead to 2026, I want to acknowledge Glenn Hauenstein. My early days at Continental in 1994 with Glenn and Andrew Nocella were foundational to understanding what makes a successful airline. Glenn is a commercial superstar, and his retirement timing, with United's current momentum, is impeccable. After a solid 2025, 2026 promises more of the same for United, but with a more favorable industry backdrop. Our strategy remains consistent, and the United team's execution is second to none. Now over to Brett. Brett Hart, President. Thank you, Scott. Good morning. While 2025 was challenging for the industry, we remained laser-focused on the customer experience and building brand loyalty. Our investments in travel experience, communication, and reliability helped us navigate disruptions. Our Net Promoter Scores, NPS, for the year increased by nearly 3 points, and we achieved our best NPS month ever in November, despite an unprecedented government shutdown and flight reductions. This is a testament to our customer focus and transparent communication during disruptions. We continue to innovate, with new features in our award-winning United app, like enhanced bag tracking and real-time updates, improving transparency and saving customers time. With over 85% of customers using the app on travel day, these investments are significantly enhancing the customer experience and winning brand loyalty. We are in active negotiations with 4 labor unions and look forward to reaching industry-leading contracts. We have a bright 2026 ahead, and I'm proud to announce that our employees will receive over $700 million in profit sharing for 2025, a well-deserved reward for their resilience and commitment. Now, I'll hand it over to Toby to discuss our operations. Toby Inc., this Chief Operations Officer. Thank you, Brett. Good morning. Our no excuses culture was truly tested in 2025 by challenges outside our control, and I'm immensely proud of how our operations team responded. Investments in our people and tools allowed us to be nimble with FAA capacity directives and recover faster from irregular operations. We achieved the highest seat completion factor in our history and ranked one among the legacy carriers in 2025. At O'Hare, our cancellations were half that of our largest competitor. We flew a record 189 million passengers and ranked one in Star D0 for the second consecutive year. Our United Express operation delivered 134 days of perfect completion, a remarkable feat given challenges at Newark and ATC staffing. In November, the FAA directed airlines to reduce departures at 40 major airports due to government shutdown-related staffing issues. We worked closely with the FAA, prioritizing the integrity of our network and minimizing customer impact. Reductions were concentrated on regional and non-hub domestic routes, often by trimming frequencies rather than eliminating connectivity. We consolidated flights where possible, using larger aircraft to move customers efficiently. Despite these changes, total cancellations were only about 4% of departures during peak periods, with minimal impact on capacity. Nearly 60% of canceled flights had customers rebooked within 4 hours of original departure. We offered refunds for all canceled flights, even for non-refundable tickets, which was the right thing to do. We closed out the year with the best holiday operation in the industry, ranking one in on-time departures and arrivals, with less than 1% of flights canceled. Following a Caribbean airspace closure in early 2026, we added 10% more seats to help customers return home. 2025 was a year to be proud of, and a strong operation is the foundation for our financial commitments and attracting brand-loyal customers. I'll now hand it over to Andrew to discuss the revenue environment. Andrew Nocella, Chief Commercial Officer. Thanks, Toby. United's top-line revenues increased 4.8% to $15.4 billion in the fourth quarter on a 6.5% increase in capacity. Consolidated TRASM for the quarter was down 1.6%. Q4 was United's highest revenue quarter ever. Premium cabins once again outperformed the main cabin, with revenue up 12% year-over-year on a 7% capacity increase. Premium cabin PRASM outperformed the main cabin by nearly 10 points. Main cabin revenues were up 1% on a 6% capacity increase. For the full year, premium revenues increased approximately 11%, while standard and basic economy revenues were down approximately 5%. We saw a nice bounce back in international flying in Q4, with the Pacific and Atlantic regions performing well, with PRASM turning positive in both. Latin America, however, had another challenging quarter. Cargo revenues for 2025 were up 2.1% year-over-year, totaling $1.8 billion. Loyalty revenues were up 9%, with remuneration from global co-brands up 12% for the year. We added over 1 million new co-brand cards for the third consecutive year. Looking ahead to Q1 2026, we expect sequential improvement, with the possibility of all regions achieving positive RASM year-over-year. Bookings and yields are outpacing last year's strong start. The domestic capacity environment is expected to be favorable in the first half of 2026, with some unprofitable capacity exiting the market. However, main cabin continues to show some weakness due to unprofitable capacity from other carriers. Newark is a tailwind for us this spring, with operations running well. We made aggressive Latin capacity adjustments for Q1 to address underperformance, but recent geopolitical events are negatively impacting Caribbean bookings, though we still have a chance at positive Latin RASM. All United hubs were profitable in Q4 and for all of 2025, providing a solid foundation for incremental capacity. We believe we are one of only 2 large U.S. carriers with all profitable hubs in 2025. Our commercial focus points for 2026 to drive higher RASMs and margins include: first, new seasonal capacity shaping of our long-haul schedule, with Q1 2026 being the fastest-growing quarter for international capacity. Second, enhanced merchandising of our product lineup, including a significant redesign of United.com. Third, enhanced connectivity, nearing our United Next plan goals. Fourth, Mileage Plus, drawing a larger distinction between true loyalty programs and reward programs. And fifth, premiumization, with our new elevated interior and Polaris Studio suites rolling out on widebody jets. Our focus areas in 2026 ladder up to decommoditizing our product, offering more choices, and winning more brand-loyal customers. We like our plan and will continue to do more of the same in the coming years. I'll now hand it over to Mike to discuss our financial results. Mike Luskin, Chief Financial Officer. Thanks, Andrew. We closed out 2025 with fourth quarter earnings per share of $3.10, within our guidance range of $3 to $3.50, despite a $250 million pre-tax earnings impact from the government shutdown. 2025 was a challenging year for the airline industry, but United delivered full-year EPS of $10.62, slightly up from 2024, and despite an 85-cent headwind from newer challenges. We expect to be the only U.S. airline to grow EPS last year, a testament to our ability to execute through uncertainty. Our plan is working, and I thank the entire United team for their hard work. We've invested $1 billion in the customer over the last year, enhancing our clubs, offering free Starlink Wi-Fi, and segmenting our products, which is attracting brand-loyal customers and driving strong top-line performance. This investment has been enabled by industry-leading cost efficiencies. In Q4, CSMX year-over-year was up only 0.4%, bringing our full-year 2025 CSMX to 0.4% as well. We expect this performance to be industry-leading, and will continue to drive efficiencies in 2026. Looking to the outlook, for the first quarter, we expect EPS between $1 and $1.50, an approximate 37% earnings improvement year-over-year at the midpoint. For the full year 2026, we expect EPS between $12 and $14, representing over 20% growth and implying continued margin expansion towards double-digit margins. Fleet deliveries this year are expected to exceed 100 narrow-body and approximately 20 wide-body aircraft, with capital expenditures less than $8 billion, consistent with our multi-year guidance. Becoming investment-grade rated is a major priority. In 2025, we paid off $1.9 billion of COVID-era debt, bringing our cost of debt down to 4.7%. Our net leverage ended the year at 2.2x. We've received 5 credit rating upgrades over the last 13 months, and are now one notch below investment grade at all 3 agencies. In 2026, we plan to deleverage further, targeting net leverage below 2x, with the intention of achieving investment-grade metrics by year-end. Free cash flow generation remains a key priority. In 2025, we generated $2.7 billion in free cash flow, and we expect a similar level in 2026. We continue to expect free cash conversion to expand to around 75% by the end of the decade. We have $782 million remaining in our share buyback authorization, and will balance achieving investment grade with opportunistic purchases. 2025 proved United's ability to manage through volatility and company-specific challenges while delivering resilient earnings. Our relative margins remain strong, and our focus moving forward is on continued margin expansion towards double-digit margins. The industry is transforming, and United Airlines is positioned for another year of growth and success. Now, back to Christina to kick off the Q&A. Summary of key financial metrics and forecasts. 2025 Q4 revenue, $15.4 billion, highest revenue quarter ever. 2025 Q4 TRASM, down 1.6%. 2025 Q4 EPS, $3.10, within guidance, despite $250 million shutdown impact. Full year 2025 EPS, $10.62, slightly up from 2024, despite 85 cents Newark headwind, expected to be the only U.S. airline to grow EPS. Full year 2025 CSMX, up 0.4%, industry-leading. Full year 2025 free cash flow, $2.7 billion. 2026 Q1 EPS guidance, $1 to $1.50. Approximate 37% earnings improvement versus prior year at midpoint. Full year 2026 EPS guidance, $12 to $14, over 20% growth at midpoint, targeting double-digit margins. 2026 capital expenditures, less than $8 billion. 2026 net leverage target, below 2x, aiming for investment-grade metrics by year-end. 2026 free cash flow expectation, similar level to 2025. Significant risk factors. Macroeconomic volatility. The industry faced significant headwinds in 2025. Newark operations and staffing challenges. A specific company-specific challenge that impacted earnings. Government shutdowns. Direct impact on revenue and operations, e.g., $250 million pre-tax impact in Q4. Geopolitical events. Measurable negative impact on bookings in the Caribbean. Labor negotiations. Active negotiations with 4 labor unions. Credit card ecosystem changes. Potential impact on MileagePlus co-brand revenue, though United believes its portfolio is less exposed than others. Boeing and Airbus delivery ramp-up. While capacity growth is managed, the overall industry delivery ramp-up is a long-term consideration for capacity discipline. Engine issues. A significant bottleneck for aircraft availability, with around 800 aircraft grounded worldwide due to engine problems. This is seen as the primary constraint on capacity growth, not the aircraft themselves. Highlights. EPS growth in a challenging year. Expected to be the only U.S. airline to grow EPS in 2025. Resilient strategy. The revenue-diverse, brand-loyal strategy proved effective and resilient. Operational excellence. Highest seat completion factor in history, one ranking among legacy carriers in Star D0, and best holiday operation. Customer focus and NPS improvement. Significant increase in Net Promoter Scores, with the best NPS month in company history during a disruption. App innovation. Enhanced United app features improving customer transparency and experience. Profitability. All United hubs were profitable in Q4 and for the full year 2025. Cost efficiency. Industry-leading CSMX performance, with a strong culture of efficiency and identified significant savings in procurement. Balance sheet improvement. Substantial progress towards investment-grade metrics, significant debt reduction, and credit rating upgrades. Fleet modernization. Ongoing deliveries of new narrow-body and wide-body aircraft improving profitability and returns. Premium cabin strength. Premium cabins continue to significantly outperform the main cabin. Loyalty program growth. Strong growth in MileagePlus, with continued co-brand card acquisitions. Strong start to 2026. Positive booking trends and yield performance, especially in business travel. Lowlights. TRASM decline. Consolidated TRASM was down 1.6% in Q4. Main cabin weakness. Continued weakness in standard main cabin seats, attributed to unprofitable capacity from other carriers. Latin America performance remained challenging in Q4. Caribbean bookings impacted. Geopolitical events and airspace closures negatively affected Caribbean bookings in Q1 2026. Capacity growth high watermark. 2025 is noted as the high watermark for domestic capacity growth under the United Next plan. Most important statements from CEO and CFO. Scott Kirby, CEO. Our strategy, to build a revenue-diverse, brand-loyal airline, is not only working, but it's remarkably resilient in tough times. We expect to be the only U.S. airline that managed to grow EPS year-over-year despite all the headwinds. The United team truly is the best in global aviation. They have made today's United a remarkably different airline than it was in the past. 2026 sets up as more of the same at United, but with a much better industry backdrop. Our plan has been working for the last decade. The United team across the board is just better at executing than any other airline in the world. Mike Leskinen, CFO. 2025 was a challenging year for the airline industry. Our full year 2025 EPS came in at $10.62. I expect we will be the only U.S. airline to grow EPS last year. This is an incredible proof point of United's ability to execute through times of elevated uncertainty when most of the industry cannot. An airline with a business anchored by brand-loyal customers isn't only more profitable, it's also more resilient. We've invested $1 billion in the customer. From larger clubs to free Starlink Wi-Fi, further segmentation continues to attract more and more brand-loyal customers, driving strong top-line performance and more durable earnings. Becoming investment-grade rated is a major priority of mine, and in 2025, we made meaningful progress towards investment-grade metrics. In 2026, we plan to deleverage further and target net leverage below 2x with the intention of achieving investment-grade metrics by year-end. Our focus will be on continued margin expansion and achieving double-digit margins. This concludes our summary of United Airlines 2025 Q4 earnings call.